Everybody to today's version of the 9 a.m. spot. Welcome. We have a great event today regarding the impact of digital banking on the valuation of business. Welcome to the guests. First, we'll make some self-introductions. We're going to have a great session today, a little longer than usual, which is good, but we're covering a lot of great material. And as always, the intent is to provide great content for people in this people in the audience, like really superb content. So there could be some key takeaways at the end of the day, and you felt this was worthy of your time, and it was a great event. So first, why don't we go through in self-introductions? I'm Bruce Singer. I am the host of this show, and what my firm does is called CFO Services by BizON Capital, and we basically help companies with cash flows, problems, financial leadership, and how we do that is by providing a chief financial officer on a part-time basis or an interim basis. So that's what my firm does. And we'll start with, from Bank of Montreal, Apurva. Can you please tell us who you are, but a bit about yourself, and we'll go through everybody.
Thank you, Bruce. Good morning, everybody. Thank you so much for joining in today for this important session. My name is Apurva Talsania. I am a BMO commercial banking manager. I come with 20 years of banking and accounting experience, both in US and Canada. And my passion is to help business owners, especially in this current market scenario. I also have a technology background for 5+ years and work with multiple not-for-profit organizations to bring solutions to business owners. With that, I pass it on to Bruce.
Thank you. Ankit?
Thanks, Bruce. Good morning, everybody. I'm Ankit Varma. I work with a firm called Valuation Support Partners. I'm a business valuator. I have more than 15 years of professional experience in valuation, litigation support, transaction advisory services, and auditing. Primarily, what we do is we help prepare clients for any litigation issues they're facing. We help them with providing independent business valuation and independent expert reports. Happy to answer any questions you may have on business valuation.
Perfect. Mona? Oh, you got to put your audio. You got to put your audio on. You're on mute. Your audio.
Yeah. Good morning, everybody. Can you hear me now? Sorry, having some.
You okay?
Yeah. Good morning, everybody.
Good morning. Good morning, Mona. Thanks for joining.
Sorry about that little bit of a technical glitch there.
No worries. We all technology is part of the game. So can you share people about you? Who are you? Your background? That would be great for a moment or two, for a minute or two. Yes.
Thank you, Bruce. So I am Mona Singh. I work with Bank of Montreal, just like Apurva. And I've been with the banking, especially with Bank of Montreal, for about 15 years now. Vast experience in commercial banking for the longest time. And I am currently working as a treasury and payment specialist. So I deal with digital banking a lot, so helping business clients on board on the digital platform. So that is what I am here to speak about as well, and hope I can help out everybody in answering their questions. Thank you, Bruce.
Thank you so much, Mona. Okay, we have a special guest today who's going to talk about some really cool stuff on innovation and technology, and we're really excited to have him. He's really an extreme thought leader and really international experience. I can't tell you enough about him, but you'll learn about him. Kader Khan, if you can share who you are, that'd be great. And it's very exciting, very exciting.
Perfect. I'll start with sharing the screen and introduce myself, Bruce.
Thank you, Kader.
Thank you very, very much, Bruce. And thank you everyone for joining us today. My name is Kader Khan, for those who do not know me. I work at Expo at a capacity of Director, Strategic Alliances and Partnership. And I'm responsible for cultivating the partnership for the business success at Expo. To talk a little bit about Expo is test monitoring and analytics experts, and we provide solution to the global telecom service providers and equipment manufacturers. Besides that, I'm very, very passionate about giving back. I'm a community leader in various communities in the GTA region. And like I said, very, very passionate giving back and helping others. I'm always open for any help that you require from the technology perspective to give you the guidance to help your business success. I'm there. reach out to me at any time. That's about me. By now you would have understood what am I doing here, right? I'm not a banker, and why am I in this particular session? So yeah, I'm not a banker, and I'm a technologist, and I'm trying to help you here to understand how transforming into an innovative mindset and implementing digital technology can help your business to get ahead and stay ahead. That's what I'm going to talk about for next 5 to 7 minutes. Okay, let me share the screen. Okay, it's here. All right, let's move. Well, we all know it is a reality, right? We are all living in an era of digital transformation driven by two.
We lost your audio. Kader, we lost your audio.
All this world as a smarter world. In order to sustain and survive and be relevant in the smarter world, you as a business owners have to build a smarter business with a smarter mindset. When I mean smarter mindset, it basically means innovation mindset. So what I'm going to do today is I'm going to give you 3 simple recommendations for you to remember. And also please do note, when you are running your business, being efficient and fast is all about transformation. And your business success is all about welcoming it. So what are those 3 recommendations? And the first recommendation is understand the technology trends that is shaping up the future and that's going to have an impact on your business. That's the first thing that you need to know. And that is my first recommendation. You need to know technologies like what is big data and analytics, what is AI and ML, what is cybersecurity, how it's going to help you to secure your business, what are the digital platforms that are out there to improve your branding and communication with your customers, how do you secure your ledgers, and so many other technologies that are out there. So you need to really understand. It's very, very important. There are multiple use cases, of course. I'm not going to go through all these different use cases, but I'll give you an example. Let's take an example, analytics, big data and analytics. What is that technology? It is a technology that's going to help you to provide the visualization of what is happening in your business. As an example, what type of customer is coming to your business, why they are coming, why they are buying from your business, and so on. It is so very critical to understand the data, which is a king of your business, in the form of visualization using analytics technology that could tremendously help you in various different use cases and the businesses that you run. It could be from the point of view of customer engagement, it could be from the point of view of customer experience, and many other things. And the second example I would like to give you is a little bit about AI. Artificial intelligence, you have heard of, many people might have heard of artificial intelligence. And our artificial intelligence is kind of cuts across many different verticals and also the banking industry. It can help you to do many things with combining the intelligence of human and the machine. Just think about it. Human processes in using their brain in 20 milliseconds. But however, the machine processes things in nanoseconds. So combining these two can help your business to succeed in many different ways, right? So what is AI? So, well, in analytics provides you the visualization. What AI can do is it can find the deviation, it can find the anomaly, and it can give you a feed so that you can take manual or automated corrective actions in your business. Again, let me give you an example. Let's say your customers, one category of customers stopped coming to your business or reduced coming in your business. So this AI, what it can do is it can find.
We're losing you, Kader.
Understand the technology. And the second recommendation is, once you understand the technology, how it is going to help your business, identify the best solution with smarter, innovative mindset that is going to help your business. Very, very critical. So I'm a lead volunteer in one of the community, which is called as Testoper community. It's a community, basically it's a non-profit community that provides continuous learning programs for individuals to achieve their career, intrapreneurship, and entrepreneurship aspirations. It is run by the experts, technology experts like me, many different technology experts, more than 30, 35 experts, to kind of help people to learn and continuously learn to become successful. And this community was, before it was manual, right? And with the COVID, we all know, like this community doing all these manual things came to stand still. So they have to quickly pivot themselves to adopt.
We keep breaking out on audio for some reason. I don't know why. Sorry, folks. Just bear with us.
Technologies to really, continue their journey and become successful. So it's important. If you wanted to be successful like them, you have to adopt digital technologies. So my second recommendation, like I said, identify the best solution with an innovative mindset, with the due sense of understanding of different technologies that are out there that can help your business to become successful. And the last recommendation is, do not become content. Maybe your business today runs well and you're satisfied, but don't become content. That is the full stop for not you becoming or making your business as a smarter business, right? Your mindset has to change. Your mindset has to continuously look to learn, adapt, and improve. Remember, technology continuously changes. So does the customer experience, so does the customer behavior, so does the customer expectation. So you need to understand this continuously, and you need to strategize, focus, execute, measure, and adapt. That's my third recommendation. So simply remember these three recommendations from me. Understand the technology, how it can help your business, and implement those technologies and select the right tools that are out there that can help your business and transform digitally. And finally, please make sure, don't become content, and continuously adapt and improve to become a smarter business in this smarter world. And with that, I come to my end of the session. And remember one thing, I really like this quote. You as a business owners do not have to really worry about whether your business is small and the big business is going to, overrun you. You don't have to really worry about that. So the world is changing very, very fast. It's not big or small who is going to win in this market. It is the fast who is going to beat the slow. And you need to be fast to become to run a successful business and smarter business. What does it mean? It means that you need to change your mindset to run of my session. And if you need any help with respect to the digital transformation, I'll be happy to assist you. Like I said, I'm a community leader. You can always reach out to me with the contact informations that are below. Happy to help. With that, Bruce, I'll hand over the session to you.
Thank you so much. That was great. Thank you, Kader. That was great. And Kader's going to stick with us. That was really, really top notch. And Kader's going to stick around as well for the session. And at the end, we have our Q&A. And please feel free to ask questions to Kader on the Q&A. That was wonderful. So now we're going to start the conversation regarding banking and digital banking and the impact of valuation. So really, it starts with bankers. How do you maintain it? So we'll get into it. I guess we'll start first. How does one maintain a really good banking relationship? How does one do that?
Sure, Bruce. Are you able to hear me?
Yes, I am. I'm able to hear you.
Perfect. Thank you. We came up with this idea because in our heart, we wanted to really help business owners today and understand the situation that we are in. These are the most difficult times that we all have seen in the history, and we are still living into it. I came on this call to tell you some information that can help you present yourself better, get your loans renewed, get a little bit more money from the bank, get a little bit support. Because why did you start your business? You started this business to take care of your family, take care of your clients, take care of your suppliers, take care of your all needs that go, or all stakeholders that go along with the business. You drive the community, and the bankers are here to support you. Now, in order for you to show the passion that you have in your business, you should maintain some good relationship with the banking professionals to support your growth and support you during this tough conversations that you're having. So Something very basic that you could do is to have a revised business plan, because we've been through the difficult time that we are in today. So each business owner should have a revised business plan. And how did you survive through COVID? How did you thrive through COVID? And what you're going to do in the next 3 to 6 months. Next part, which I think is very critical, is cash flow. Do you understand your own cash flow in the business? And do you rely on other partners in the business to provide you daily update on your cash flow coming in, coming out? Next thing to worry about is aging of your receivables. Communication, my friends, is the key here, is to talk to your stakeholders, talk to your partners. Because when you talk to your clients and your suppliers, you find out valuable information that allows you to take some business decisions. So for an example, you had a customer on your list which you are about to receive $500,000 and they pay you in 30 days, for example. Because of COVID, you know everybody is in trouble. So if you pick up the phone and call your client and say, are you still in a position to pay me back in 30 days? Or are you going to take longer? That's the communication. So if they tell you they're going to pay you in 60 days, now you know you have to plan a little bit ahead and better with your banker to figure how you're going to take care of yourself within the gap. So I think these are some very critical things that you need to take away from today. Communication is the key. A revised business plan is going to help you, and knowing your business clients and stakeholders in the business is going to help you prepare yourself to have a fantastic conversation with your banker and build a good relationship. I'll pass it on to Bruce.
Yeah, thank you, Apurva. We're going to come back to a few things, but I want to ask Mona, why keep business stakeholders happy? Like, what's the relevancy behind this? You know, your clients, your employees, your suppliers. Talk about the connections. Yeah.
So thank you, Bruce. So it is very important to keep up with times. The times are going digital now, so it's not acceptable to people anymore to wait on a check to come by mail to receive their payments, be it your employee, be a supplier, be it anybody. So being on top of things is also good for your business, to help grow your business. So you yourself don't want to be waiting on the payments for receiving a payment by a check or by any other way that you have been doing in the past. So keeping up with the time and being efficient, as Kader mentioned. So being efficient and fast, taking use of the tools that are available through your banking, which is digital banking. So that helps you with the receivables and the payables. So you're spending more time growing your business rather than running after dealing with these issues.
Okay, thank you. So
Thank you.
Thanks, Mona. So when we jump to, I want to ask Ankit a question. You know, if a business does digital banking, how does it impact my business financially?
Oh, Bruce, this is the essence of it, actually. You know, what Kader has been talking about technology, what Mona and Apurva are talking about digital banking. Basically, when you get technology, digital banking, you get artificial intelligence based accounting, you're talking of digitalization. You're looking at managing your cash better. And cash flows are critical for business valuation under the commonly used income-based valuation approach. You know, with digitalization, most of the financial transaction processing tasks are getting automated. They are improving business systems. So basically, you're relying more on systems and relying less on the owner. So as soon as systems come into place, it's a positive risk factor which helps you increase the value of your business. You know, like Mona was talking about checks being deposited digitally. You're talking in efficiency in the money transfer process. So cash flows are more readily available for utilization. And when you're talking about, you know, better management of working capital, which one is able to do with the digital banking tools, you're looking at an efficient working capital. So you can have surplus working capital, or, you know, you can have surplus cash in the business, which can actually help you in times of, in such uncertain times. So in essence, what we're doing is trying to make efficiency, trying to make the workforce more agile. And when you're making business models and you have readily available access to financial assumptions, your projections will be more realistic. And once your projections and cash flows are more realistic, the bankers and the valuators can place more reliance on them when they're doing the valuation process.
Okay, thank you. Thanks, Ankit. So what is the impact of digital banking on cash flows? What is it?
So in terms of cash flows, it has a very positive impact, because in essence, what you're doing is creating efficiency. The accounts are real-time updated, with digital banking and artificial intelligence, your accounts can actually be updated every day. You don't need to wait at the end of the month. You have a frequent aging analysis, which is being done, which is assisting in better management of stakeholder relationships. You're reaching out to customers when you clearly know if the money has come in or not. And with your vendors, that when the time is due, you're actually making it on time, and then they're receiving the money the same day. There is no money lost in a check transfer process. So you're actually managing your money better and your relationships better. In terms of cash flows, it is more accurate and there is timely monitoring. And what you're also able to do is actually do the actual versus budgeted forecast. You're able to do that comparison more frequently and more precisely. So what we're talking about, this can help you evaluate and project temporary situations of cash flow shortfall or excesses. And right now, people are facing shortfall. So it's very important to actually be on top of it and have your accounts real-time updated.
Okay. And can you comment, what about the balance sheet? How does that come into play in terms of the balance sheet?
So in terms of balance sheet, we're talking about investment in technology. I would request people to look at it like a one-time investment and not look at it as an expense, because this is actually going to help in generating returns in the form of, creating better efficiency and better return on your existing assets and better return for the time of your employees. Your employees are very valuable. Your workforce is very valuable. So now we're looking at that. That is one aspect of technology investment. And then we're looking at, one needs to understand the redundancies or redundant assets in the business. These are essentially the assets that can be withdrawn from the business without impacting the ongoing business operations. So with efficient working capital, there can be a positive impact on cash flows and surplus cash that can be treated as a redundant asset for valuation purposes. In essence, what we're talking is it will actually help you increase the value of your business. And the opposite is also there, that when there is loss of efficiency, one may need to inject additional working capital, and you may need short-term lines of credits, and that will have an adverse impact on the valuations. So in the current pandemic, it has totally highlighted the importance of managing your cash flows and your balance sheet. You need to ensure adequate liquidity, and that will be in the form of cash, and maintaining healthy banking lines of credit. You want to withdraw only what is necessary, and that will actually help you sustain your operations during the current tough times.
But let's expand on the connection between the digital banking and all these things, right? Just can you expand on that? The connection. Where is really the digital banking going to, just going a little deeper, the digital banking piece?
Right. So when we're talking about digital banking, we are actually talking about the efficiency in the check process, check deposit process. We're talking about efficiency in money transfer using Interacs, using credit card, a lot of management, and a lot of people are already tech savvy, but you need to get your management on board and be able to, embrace the change towards technology. You need to help them to actually adopt the digital banking tools, so that there is better efficiency and there is better monitoring.
Okay.
So we're talking about better systems being created with digital banking and better cash flow management. We're talking about accurate and timely data available for decision makers. With a lot of tools, not only are you getting that data, you can actually analyze it better.
Thank you. I want to go back to Apurva for a moment. I want to talk about, you talked about some of this before, but to drill down a bit. So what would be some key expectations that a banker, from the banker, from its customer, from its client, what are those expectations? And if they meet those expectations, what's in it for them? How do they benefit?
Sure, Bruce. This is a common question when it comes to bankers, right? So I think the first expectation is from the management. We like to make sure the business owners really understand their business. Like a common example giving is cash conversion cycle. So how many days is your inventory waiting in your garage? How many days is your receivables? how many days is your payables, and what is that gap or that cash conversion cycle that Ankit just spoke about.
Yeah.
So having a common understanding about what's your shortfall or what's your excess is an important part of discussion during the loan renewal process or a loan approval process. Because once the banker identifies there is a cash flow shortfall or an excess, we can identify issues for clients even before they happen. So for an example, like last time, we figured that when you spoke to your client, they said, I'm going to take, instead of 30 days, I'm going to take 60 days to make you a payment. So then what Mr. A in the business does is, he's going to call his supplier and say, I have great relationship with you for over 20 years. I know I pay you in 30 days. Because I have this challenge and I'm waiting for $500,000 to come in, would you be able to provide me a little bit of an extension and ask for help? And the other gap, let's say 15 days, he allows you to expand that payable, right? From 30 days to go 45 days. So there's that 15 days still gap. Then he comes to the banker and said, I have done A, I have done B, and I still am short 15 days. Can you help me? This is the kind of discussion that we are hoping to have from our clients. And I just wanted to highlight this. This doesn't look great, but you don't want to be in overdraft or bouncing a salary check or showing lack of profitability and then go to the bank, because guess what? The bankers already know you are in trouble. I think that's where the relationship breaks, is because we need to trust you and the business owner need to trust us that we are here to help. With that, I pass it back to you, Bruce.
I want to ask a question though. But COVID-19, look, there's some companies that are in trouble, right? And they're putting out fires. Okay, cash flow is a problem for a lot of companies. So what do? They call you up, they talk to you like let's say I'm a company, I'm in trouble now. I know I'm gonna go through the rough times.
Yeah.
I won't be able to do all these things. So what do they do? Like you said communication. Like what do you do in a case like that? They're in short-term trouble.
Yeah, so Bruce, thank you, because this is exactly where business owners' passion comes into play and the stakeholders that they work with. You know who are the powerful stakeholders for business owners? It's their internal partners and external partners, like accountants, like CFOs, like bankers, like lawyers. Like these are the people who they depend on and they can ask for advice during difficult times. For an example, from bank perspective, yes, I represent BMO today and I'm a commercial banker, but I'm here to really talk to you and help you support. Doesn't matter whichever bank you are at today. I think business bankers in general have a good heart to help your business. That's why they joined the role. So for an example, if you are in trouble, there are some very good relief programs that are available through the banks. So for example, you can defer your principal payment on a loan up to 6 months. You can actually have a temporary increase on your line of credits that we just mentioned. You have that 15 days, 20 days gap to receive the money.
Good.
We have certain opportunities from the government where you can apply for certain government grants to get additional cash flow. Sorry, I hope I answered that question, Bruce.
No, it's good. It's good. It sounds like they should, they to weather the storm. It gets back to the communication, okay? Because they don't want to be put in a position where they're too late. They come to you and it's like firefight, right at the end.
That's right.
It's like a firefight.
Again, I go back to this point is, before it gets to this, you want to come back to the banker and show the relationship.
Exactly. It's a partnership is what it really is. You know what I mean? So let's get back to Mona. Mona, I want to ask you a question. Can you describe, like, I hear the word digital banking, but to me, digital banking to me, I'm a little more sophisticated. Some people, it's going on the computer on my BMO account and making transfers. What really is digital banking? Like from a business perspective, what really in the weeds? Let's get into the weeds a bit.
Right.
You know what I mean?
That's a very, very good question. Thank you for bringing it up.
Yeah, the weeds.
Okay.
Yeah.
Perfect. So thank you, Bruce, for bringing it up. So digital banking is nothing. It's just banking made easy that is available to you 24/7 at your fingertips, be it via your phone or your desktop or laptop or whatever device you're using. So basically, you as a customer has the power to manage your financial needs whenever, wherever, and however you may choose. So in a gist, it is business banking or digital banking, just like an online banking platform, just like you all have a bank card, I'm sure, for your personal banking. And many a times business banking customers have the same kind of access as a bank card. Now that access with the bank card for online banking does help you with personal banking in a great way, but business banking needs could be a little bit more complex, and not all of those can be accomplished using the bank card access. That's where digital banking comes to your rescue. Now, what are those different things that the business banking needs?
Yeah,
Could
give an
be
example.
your
Yeah.
could be your account information, like it was mentioned earlier. You need to see your real-time transactions. What transpired just an hour ago, half an hour ago? When are you getting other like what do you expect? What your account balance would be at the end of the day? That's your account information. The deposits, what kind of deposits accounts you have? Do you have ability to make foreign exchange transfers yourself? You don't have to call the bank to do the foreign exchange transfer for you. You can do it yourself through the digital platform. The receivables, so instead of waiting on checks, you ask whosoever needs to pay you to pay electronically, like EFTs or wires. And similarly for the payables, like you are making payments to the billers, to your employees, to your suppliers, vendors, whosoever. Similarly, you pay them electronically via EFTs or wires. And now there are point of sale purchases of point of sale machines available as well. So these are really great tools that combine as digital banking that can definitely help you save time and focus on your business rather than managing all these different aspects of receiving and paying funds to each other.
Interesting. So if you talk about we're going to drill down a bit. I'm going to go back to Apurva in a minute. The real benefits, just the benefits of digital banking to, if I have a business, the real benefits. Because when I'm thinking I'm an owner sometimes, the benefit to me is, hey, I'm going to do digital banking. I'm going to do it for the bank. And am I going to get more money? Like, what is like Apurva or Mona, what is the real, like how do you sell it to me? Because it sounds like simple, but what is the real benefit?
Mona, you go first, I go next.
Yeah.
Sure.
What is the real benefit,
Yeah,
I'm busy. I'm an owner. I'm busy making sales. I'm busy. This is detail. I don't want to do detail.
Yeah,
You know what I mean?
absolutely. So first and foremost, it saves you time. You don't have to go visit a branch to do these transactions.
Okay.
You're doing it yourself, saving your time, saving your money, saving your resources. Sometimes people hire people to do these transactions for them. So they send their couriers or whosoever to do the deposits or do the wire transfers to the branches. So all these things you're factoring in, and the other people on the other end, the stakeholders, they're not waiting for your payments to come. You're not waiting for their payments to come. So everything is at right there right now for you. You're not waiting on anything. You don't have to go anywhere. It's available for you 24/7. You are in export business or whatever business, and you're traveling all over the world, but you have an account in Canada. How are you supposed to do your banking if you are in Australia? It's digital banking that's going to help you do it. So these are some of the aspects definitely that are going to assist you with meeting your needs.
Great. I have another question I'm going to ask. What are the common, I use the word should not do's, that you see, the common, call them mistakes, things that actually go the wrong way, that people should really avoid or stop doing? Well, look, we're in a new world today. Things are different than they were a year ago or 6 months ago, right? So in the current environment, what do you see? What are the common things? And you have to tell people or businesses, hey, don't do this. This is going to hold you back. Are any of those should nots? What are those should nots?
Yeah, I can take it on. And based on my 15 years of Canadian experience in the dealing with business owners, there are some very common mistakes that are being made, especially while presenting their financial statements and their current state of business. I'm going to walk you through that. Thanks for your question, by the way.
Yeah.
Very timely. So basically, very simple, is being carried away based on capital requirements. So couple of things. One is, people feel like it's very easy to raise money right now because of digital aspect of raising funds. However, what you're going to do with those funds is also more important. And I also want to highlight something. The common mistake that people make after raising capital from bank or from third party or external is they go buy physical assets with those money being raised, and then they don't have a plan to pay that back. So the money raised by you from a bank, from a private equity firm or anywhere, this is where your CFO service comes into play, where the financial officer in your company is going to tell you how to use your funds and how to make a payment to the funds that are being raised. And if you bought a fixed asset that needs to be paid out in 25 years, if that money was raised to make a payment to your supplier or make a payment to your employee, which is not due in 25 years, it's due in 25 days. So if you use those funds for paying your employees, that will be the right use of funds. The mistake would be to use that fund and buy a piece of machinery that will yield you money in 10 years. So this is the common mistake with capital. Second one, which I think is very important in today's world, is depending on others. Business owners need to trust each other and have a team around them, but also need to have their own expertise. So like businesses who are medium to large with 3 million to 50 million in revenue, the common mistake that happens is the business owner keeps all the responsibility or delegates most of the responsibility to their team members. I see that as a challenge, because if you don't look at your daily operations yourself as a CEO or a CFO, I think the challenge with that is people start to be a little lazy, and then you try to delegate work to them, work doesn't get done, and you could realize the cash flow cycle of this situation goes under. So these are a couple of common ones. Bruce, can I add one more?
Sure.
If we have time. This is a very common one, is you are passionate about your business. So basically you're really going to show high projections to bankers. And let's say, for example, you are a machinery manufacturing unit, and you tell us that you have another $15 million order that is coming to you in next 30 days. Those things are great. However, what if that order doesn't happen? You need to build that projection within your financial statements. So when you go back to your bank and you're asking for a loan renewal or a loan approval, you better have realistic projections that supports you with the contracts that you have signed up with. This is the way to get more money from the bank and your bank partner, and save yourself the embarrassment if you don't meet the projections. This is where I think CFOs come in the play very quickly. Thank you. I'll pass it on to you, Bruce.
Thank you. I want to go back and ask you, there's a question came up here. I want to go back to Ankit on a question of valuations. Given the current economic times, digital banking, no digital banking, what is the impact overall that's really taking place lately on valuation? Can like things, for example, can involve digital banking really, like where's it going? Because it's such a, we're in a very, very volatile time, so like what are you advising your client? I guess, what are you advising your clients? Like, because people, I guess the buyers are trying to beat them down, right? And your client wants you to beat them up. So can you talk about that, the current status of affairs and valuations?
Sure, definitely, Bruce. It's a very valid point, and Apurva's last point was also very valid on terms of higher projections. So I'll tackle your question first, Bruce, and then I'll come to the projections as well. So in terms of shareholder value, we're talking short term, long term. Yes, in the short term, there has been a decline in values because we clearly see there is a decline in revenues. There's a decline in top line. There's a decline in cash flows. Some businesses have a negative bottom line. And yes, this is not the best time to actually look at selling your business. If you can sustain it, if you have the ability, you can actually sail through, and I'm sure things will return to normal in the next 3 to 5 years. But if you're actually going to be selling your business right now and you're under the water, it's going to be a distress sale. You may not end up getting the value which your systems, which your processes, which your whole business may deserve. And that's where it comes back to the sky high projections. What one needs to do is actually break the projections into yearly budget, break the budgets into monthly budgets, and start tracking those monthly budgets weekly to see, are you able to achieve those budgets? Okay. What people need to do, and whether you have digital banking or not, all I'm saying is digital banking assists you. All these are great tools which actually help in generating efficiency. Your workforce has more time to look at analysis, do proper follow-ups, maintain better relationships. So what we're talking is, when you're able to track your data better, the quality of assumptions going into your projections is very realistic. So one needs to be realistic, and those projections need to be achievable. So if a business has a track record of achieving their budgets and projections, it's a favorable factor. We look at it very positively from a valuation standpoint. But if they're not able to achieve that, it causes a negative downflow. So to put it shortly, we're talking about your ability to project and budget right. So you need to have your right assumptions. You need to keep a track on those financial assumptions, whether that be working capital days, breaking it into receivable days, payable days, and that's how your value will be determined. If you let it loose, your value is going to deteriorate in the short term, and it may cause a distress sale.
Thank you, Mike. Thank you. Kader, a question came here from a gentleman that I know quite well, actually. Thank you, Mustafa. What technological, excuse my tongue twisted, technological solutions would you recommend for managing and forecasting cash flows?
Well, that question is more for Apurva, not for me, Bruce. I'm not a banking person, but I like to kind of say a couple of things because you asked this question to me, right? So because I addressed, my theme today is an innovative mindset and being a smarter business. So because we are talking about banking, from the technology point of view, this, as a business owner, you can do two things, right? The first thing is leverage what bank provides you and become digital, improve the efficiency in cash flow, financial statements, everything that was explained by the experts here. That's first step, right?
Yeah.
And the second step is be an innovative mindset. I'm not sure if you all have heard of this called as an open banking. So open banking is all about a concept where banks wants to provide an API for the business to customize the banking experience, what they do with the banking, the way that they wanted to do it with their own innovative mindset, with their own flows, right? So this is a concept called open banking. So this is what I talk about, the innovative mindset. Well, take the service and leverage the service what banks provides, and also use your innovative mindset, think differently than what is provided, and build something for you that could customize well for your business operations to improve the efficiencies, right? So these are the 2 points. With that, I'll hand over to the experts to answer the technology tools that you can use for the banking.
Okay, and then there's another question after that.
Bruce, I will let Mona lead that.
Okay.
Yeah,
okay.
Mona.
The technical, Mona, you're in.
All right. Yeah, cash flow definitely is the backbone of all businesses. So receivables and payables. If you're receiving funds, you are able to pay funds. So that is where digital banking comes in. So rather than, again, coming back to the same harp that I've been harping, not dealing with checks anymore, deal with EFTs, electronic funds transfers, or wire transfers. Those are more electronic modes of receiving funds and also paying funds. So that's definitely one of the biggest solutions that we offer to all our customers.
And Mona, I'm going to add a little bit to this is I look at bank statements every day. And there is a common difference. People writing checks and receiving checks versus people getting electronics funds transfer in and out. Give you a common example is if you are a medium-sized company, $500,000 to $10 million in revenue, for example, right? Then if you are receiving money from your clients using checks, I see there is a time gap between how much time does it take to deposit those checks. Maybe they paid you today, but you couldn't get to the bank for 5 days because of COVID or whatever reasons it could be. As opposed to the other side of the bank statement with same company, they are receiving money electronically from their clients, which is deposited the same day they paid the money. And let's
That's the
flip
way to
it.
go.
So that actually helps you with account receivables. And
Good
then
point.
let's go ahead, Bruce.
No, I'm listening. Yeah, good point. Yeah.
And then if you go to the next point is keeping your employees happy. If you start writing checks, let's say your payroll was in 2 days on Friday, right? So you start writing checks in your office, and guess what? Your bookkeeper is off due to being sick. Now everybody is scrambling to make a salary payment, right? So I see that on the left side of a bank statement where checks have been issued and the amounts are wrong, or the words and the amount doesn't match and the check bounces in the employee account. Think about that. They are all relying on these funds. And then if you go to the other side where they are using digital banking, the service provider is directly depositing funds into employees' accounts. Think about retention. Is the employees going to be super happy being paid first thing in the morning on Friday, and they can go and buy groceries? So this is the big difference between a paper-based or a manual-based company and a digital-focused company.
Okay.
I mean, Apurva, you're right. Sorry, Bruce, you're right from the process point of view. But I believe the question was, is there a name of tool that they can use to improve the cash flow, right? And from that point of view, obviously, there are so many tools bank provides it off the shelf that the customer can leverage to do. Is there any tool that is provided by the bank? But from the community activities, I can say I've used a couple of tools. I've used Xero for that. And I have used also QuickBooks for that, right? So that's my personal experience, but I'm not the person to recommend the best tool. Is there any, Mona?
Yeah, absolutely. So sorry, Bruce, absolutely. To answer that question, the bank does have the online banking website or the tool that it is. That provides with the EFT abilities, electronic funds transfers, where you can export or download your own EFT files. So that helps with as well. Plus, there are point of sale purchases machines available for the receivables. If you're in a industry where you receive funds from the clients directly, rather than receiving cash, you can, right now it's contactless everything as well. So it's point of sale machines that are available not just as a machine, but they're portable, they're online, you name it, and they have a device made for you. So yes, definitely there are options available.
Just taking Mona's point forward. So just taking Mona's point forward, when you're able to download the data from digital banking, the EFT files or CSV files, one can utilize those in softwares like QuickBooks, which Kader was talking about. And then you also have artificial intelligence, which will actually help you make your books automatically. And when you're looking at that, you also have business intelligence tools on top of that, which will actually help you analyze and which actually will give you insights in terms of what's actually happening. And a lot of banks already have a lot of analysis which is readily available. So if you're actually banking and you have your banking, well managed and concentrated at one place, the bank will be able to give you insights. If not, if you're dealing with multiple banks, you can use business intelligence tools, and there are a lot of them around, and you can actually get good insights, and you can actually have your data well analyzed at the end of the day, and you're not dependent on anyone. The tools are doing it, the humans are there just to see and overlook it. They're there to actually analyze it. So that can actually add immense value to everybody. It creates a lot of transparency.
Well said, Ankit. That's what I was referring in my presentation. So analytics is all about visualization, which is the BI tool that you were referring.
Yes.
And then on top of that, building the intelligence using artificial intelligence, all these different technologies that really comes together to make your business very successful. Yeah. Not only from the point of view of banking, but also from the point of view of many different use cases, right? Customer experience, retention, many different use cases.
And because actually, I can predict by good information who are your customers on the aging report for receivables. So are you receiving money from Walmarts or from big box retailers or higher end customers. So if you're in a medium sized to large size businesses, even before you provide me with the aging report, I might have some information for you already.
That's great. That's great. Wonderful. I've got one last question to ask. This has been great, by the way, discussion. We're going to come to it very shortly. One person asked a question. Basically, what financing? What if I'm in the business? What if I am in the business of buying businesses? You know, what kind of financing is available for someone like that who basically wants to, I guess, take advantage of maybe a good deal today? You know?
Oh, okay.
So how does that work? You know what I mean?
Yeah.
Have I got it right, Joe? I got it right? Joe asked the question. What's available to buy business? Because I love to buy business. What are the opportunities out there?
So I'm going to give you a twofold answer along with my partner Ankit here. So basically, there's three partners that you need for this kind of a transaction. Number one is your internal CFO, who understands your current business that you are in today and understands your cash flow. The second partner you need is a business valuation service who can go and evaluate the business that you are planning to purchase. And third is your accountant who gives you good advice on whether this business is something you should add to your portfolio. These are your top three. Once the top three is covered, you go to the lawyer to figure out if there are any technical difficulties with this transaction and any kind of issues related to the company that you're buying. Coming to financing, once you put this project in place of these partners giving you advice and you bring that project plan to the bank, it's much more easier for me to see, oh, I have a valuation, I know the risk in the business, and this client who is buying this business has done their homework. Yeah. And then money is not a question anymore, because now I'm thinking about the business that you are buying and you're diverting my attention to their balance sheet and their income statement. So this is
cross your T's and dot your I's. It's always about the planning.
Absolutely.
That's
before the banker does this, Bruce, I want to make sure the client has done it. That is showing me the scoring system on the management to be at a top notch. Because if they have done the homework, I don't have to do one, or I can focus on the other business that he is looking to buy. So my time cuts into half, and that actually is building good relationship with the banker.
That's fabulous.
So Bruce, I have a quick recommendation for you. So once you implement the recommendation from Apurva, have a lot of money in your bank, you can reach out to me. I can help you buying the
spend the money. Okay. My webinars are free.
Yeah.
Service, community service.
Lots of they're free. Okay. Okay, we're come to an end of the session. This was really, really insightful, very informative. Actually, the last section was great when there's a lot of chatter. As I just sat back and just sit back. I don't have to think of anything. You know what I mean? This was great, right? So
Bruce, there's one more question on the panelists, if you don't mind.
Yeah.
So one question, it says, how hard is it to set up the digital capability for electronics funds transfer?
Go for it. Go for it. Yeah.
Mona, would you like to take that on?
Absolutely. You just have to reach out to your bank. That's it. It's just that one step you have to do.
And they walk you through it. They walk you through it.
Absolutely.
That's great. That's great. Anyways, look, thank you. Thank you, Apurva, Ankit, Kader, Mona. Thank you to the people that put their videos on. I love videos when they're on. I think we'll do the next one's going to be on how to overcome your virtual comfort zone.
Absolutely.
And encourage people. We're going to do a video. We're going to do a session on that to get people. We had a great turnout today, and I don't get it. Okay, well, it's great to put it. It's more fun. But we're going to do one, how to get out of your virtual comfort zone. That's going to come soon. Okay. And thank you, everyone. This was great. And I want to say goodbye. And we went longer than usual, but this is a very impactful and very insightful. And thank you so much.
Bruce, thanks to you for organizing and hosting. Without you, we couldn't do this.
No, and thank you. And I want to keep everybody out. We have some other events coming up in a week or two. There's a very big event that I'm personally very passionate about regarding diversity and inclusion in society, in community, not just work. And that is something, if you look at my LinkedIn, I encourage everybody. I'm going to give it a plug. We have the deputy mayor the deputy mayor is speaking at this event. There's some very high and influential people. You don't want to miss this event. And Apurva is going to be at that event too, right? And Kader's
I'm excited. Yeah, I love to represent.
We're always there to support you, Bruce, and we are always there. And Apurva is going to support.
Better believe it.
Testoper
Hey, that's the name of the
community.
game, support. And you mentioned support at the beginning for non-for-profit, for charity, and giving back. And this is definitely giving back. So I encourage everybody to check this one out. And we're really excited about it. There could be 1,000 people on that webinar, potentially. Okay, if the way it's going. So anyway, so you take care. Everybody have a great day.
One takeaway for everybody is based on what you heard today, we have a cash flow planning guide that I'm happy to send it to you if you send me a message on LinkedIn or BMO, doesn't matter. I can send you that free cash flow planning guide. Thank you.
Thank you so much. And everybody, please sign up for diversity and inclusion. You do not want to miss this event. And everybody have a wonderful day. Take care.
Thank
Bye-bye.
you very much.
Same to you.
All the best. All the best. Bye, Mona. Bye-bye. Take care.
Bye-bye.
Bye-bye.